from the eNCA Money Desk, and you're talking about the Johannesburg Stock Exchange, which against all odds seems to be doing quite well.
Yes, very well. And this is despite very tough economic times, high interest rates, and markets and investors being a bit hesitant. But let's talk now to the CEO. So despite a tough operating environment fueled by the cost of living crisis, the energy crisis, and the lower global economic outlook, the Johannesburg Stock Exchange managed to increase its earnings by 10%. Now, the JSE, which is the largest stock exchange in Africa, says diversifying its operations to include non-trading revenue contributed to boost in net profit. Now, despite an expected rise in operational expenses and a tough trading environment, its business says it is well positioned to continue growing. The CEO, Leila Fourie, joins us this evening to unpack the interim results. Leila, thank you so much for your time this evening. So let's get to it. Stock markets globally have been volatile for a while now, with geopolitical events and higher interest rates spooking market participants despite recording a profit. How tough has it been for the JSE?
Well, we have experienced headwinds both globally and locally. Globally speaking, we've had to deal with fears of recession, rising interest rates, the unpredictable outcome of the Russia-Ukraine war. And then locally, we've had our own diplomatic dynamics to deal with relating to Russia. We've had to deal with the FATF grey listing and, of course, low growth and the power crisis. Notwithstanding that, we do have a diversified market, and although our equity markets were down by 5% off a very high base last year of 11% up on revenue, all of our other markets fared very well. Bond market and the financial derivatives were up double digit. Our information services market was up 13%. Our JSE investor services was up 23%. And our strategy that we really promised on and are now able to deliver on is really about trying to diversify our markets. The equity markets, which is our biggest market, go through ups and downs. And that means that revenue increases and decreases according to market dynamics, which are largely out of our control. And so what we've done is that we've built up a base of diversified revenue to just reduce those extreme edges, both up and down, and produce more value and quality earnings.
So far this year, the JSE and other exchanges has seen a number of delistings. Are you concerned that there may be questions around the value that the JSE can offer investors, or are there reasons combined with other factors?
We've seen delistings as a feature over 30 years, and it's a cyclicality of ups and downs. In fact, we saw 200 delistings over 2 years in the early 2000s. Which is much more severe than what we're experiencing now. We are experiencing a much more concentrated market, with some of the mid-caps like Liberty being reabsorbed back into Standard Bank and a couple of other takeouts. And those counters are still available for trading, but just as a part of a bigger whole. What we have seen over the past year to date is an increase in the market cap of just over 11%. And so while we are concerned about the delistings in the small and mid-cap market, the larger end of town continues to grow. And the question is, what are we doing about it? We've made some sweeping changes in our listings requirements. We've introduced a new private placements market where we've had more than 30 new companies coming to market seeking to raise capital. And we're also going on multiple roadshows with public and private sector and with investment banks to try and encourage inbound listings. So we're really working together with our market to try and grow our listings pipeline.
Leila, just back to the consumer. Is there any way that an average consumer can tap into the JSE to unlock investment opportunities?
Certainly, we are building an inclusive market, and we've done a lot to try and educate and improve financial literacy. We have more than 23,000 students and both at school and university playing a trading game on our market. We've just introduced an app for that market. We also do a lot in our investor services space. We have just over 4.5 billion rands worth unclaimed dividends, and this is largely older people and BEE recipients who are unaware that they have dividends waiting for them. So we're about to launch a very important campaign on a nationwide basis to try and encourage investors to redeem their dividends. And there are a number of initiatives that we're introducing on the financial literacy side to try and improve interest and improve knowledge of trading on our markets.
Thank you so much for your time tonight, Leila. That was the CEO of the JSE, Leila Fourie.